Hey guys, Jason Sharon here with Home Loans Inc. Here to teach you about how to calculate residual income in an advanced scenario. The idea here is practical application of guidelines to help more vets. A little bit about me, Jason Sharon, Home Loans Inc. I was in the Navy for 20 years, from 1993 to 2013. I was enlisted for 9 years and commissioned as an officer for 11. Loan officer starting in 2015 in March. Opened up Home Loans Inc. in March of 18. I'm licensed in West Virginia, North Carolina, South Carolina, Georgia, Alabama, and Florida. And a little weird thing about me, I'm a certified barbecue judge. Production accomplishments, 65% of my business VA loans. Been doing this for 6 years. I averaged 22 units a month last year, averaging 33 units a month this year. 60-40 split purchase refi. I've written and published VA Mortgages Declassified, a book on VA loans. It's on Amazon. I was the first moderator in Vetted VA. If you're not aware of that, you should check it out on Facebook. And I've been interviewed by several national magazines, including Money.com, National Mortgage Professional, and Housing Wire, to talk about my VA knowledge and VA loans. Residual income. Why is it important? Well, residual income is the calculation that is basically what's left over of your income at the end of the month after your debts are paid, your estimated utility payments, and your normal payroll withholdings. It's a very strong indicator of the health of the loan, and this is a showstopper. If you don't pass residual income, do not pass go, do not collect $200, you are not getting this loan. So this is a very important calculation that's done on every single VA loan, but usually on the back end. Here's a residual income chart. There's a couple of them. This is the one that's most used. So this is what's required based on family size and region if your loan amount is $80,000 or above. So for this particular situation, we are in the South, and it's a family of four. So the required residual income is $1,003 a month. So just keep that in the back of your mind. We're gonna do the residual income calculation. It has to exceed that. All right. So for our scenario, real life scenario, Master Chief of the Navy is transferring from San Diego over to Charleston. She is married and she has 2 kids. Her basic allowance for housing is $24.24. Her basic allowance for sustenance is $386.50, and her base pay is $71.43. Her taxes are $401 a month. Social Security is $442 a month, and her FICA tax is $103. She claims Alaska for her home records, so no state tax. Here's a snippet from her LES. So we're starting off DTI 75%. This is very, very high. I was very worried about this. So let's look at her LES. So this is a snippet of her LES. Here's where her pays are. Here's where her taxes are. Those are the numbers we're going to use in the DTI calculation. The property that she's buying, 4651 square foot, purchase price $800,000, taxes of $3,600 a year, HOI insurance $2,400, $600 a year flood, and HOA is $300 a year. Okay, so we're going to use these numbers here in a bit. Her debts, $1,958 a month. For her and her hubby have matching BMWs. No kidding. Credit cards, $750 a month. Navy Fed, Military Star, USA card, and installment loans for a boat and a Harley of $1,017 a month. Here's the actual calculation. So we've got the family size, we've got the mortgage amount. That's what the gross monthly income is, and then you put in what the monthly payment is going to be for principal, interest, taxes, insurance, HOA. Monthly payments could be $37.88. And then we look at where her debts are. So this is car payments, credit cards, installment loans, childcare expenses, and other. So it comes out of this. So let's go on to part 2. So then what VA does is have you estimate 14 cents per square foot for utility and maintenance costs. So about $238 a month for that. Then you put in the monthly taxes from the pay stub or LES, depending on if they're active or separated. Comes up to $947. The amount residual, remember we saw this on the chart earlier, $1,003 is required, and hers was actually $1,256. So we are good. Now we did this by the skin of our teeth because she had to pay off an installment loan and get super cheap homeowners insurance, because whenever we started off this loan, we were failing the residual income calculation. Now, I have seen residual income fail at a 53% debt to income ratio because the vet had very low income. So if that gross gross income is low, it's tough sometimes to pass residual income. States I'm licensed in, again, West Virginia, Virginia, North Carolina, South Carolina, Georgia, Florida, Alabama, in case you have any lending needs in there. My contact information, jason@homeloansinc.com, 843 low rate. Thanks. Hopefully this helped, and go out and help a bunch more veterans. Thanks. Bye.